The demographics, it's one of my favorite charts to look at because it shows that, so we got low inventory now, but millennials have been the largest demographic in American history, and they're just now reaching the highest, as far as number of millennials, the peak age for buying a home, first-time home buyers. They're just now reaching that. That's like a surge of new demand coming to the housing market.
Excited to welcome Percy Nikora. Percy is the co-founder and managing partner at Penn Capital, a vertically integrated multifamily investment company. He has been investing in real estate for the past 20 years with an emphasis on multifamily over the past 10. Welcome, Percy Nikora, to Real Estate Hacking Live.
Thanks, guys. Thanks for having me. Excuse the hat, because I figured I need something to keep the glare from the camera. So I hope that's okay.
No, you're good. I had someone comment on my receding hairline. I'm like, yeah, it's been receding, but I've seen my grandpa had decent hair, so I'm hopeful. Anyway, you've got a depth of experience in the real estate space, just in general, but also multifamily over the last 10 years. What are your thoughts going forward? Because you're underwriting deals now, you've got deals in inventory. Going forward, like now, you get a good opportunity. You're underwriting. What are some of the main things that you're looking for to help you plan accordingly over the next, say, 3 years?
Sure. So first off, I think a lot of the points made by your previous guests, Sarah and Tom, as well as Jay, they were right on, right? So a lot of it depends on sort of the local markets, and we specialize in secondary markets that have really good job growth and population growth. I'm glad to hear that Sarah is bullish on Huntsville, because we are really bullish on Huntsville as well. We have somewhere around 1,400 units in the Huntsville area. So to answer your question in terms of what have we noticed and what are we doing differently, obviously interest rates are up. So during our underwriting, we are projecting higher interest rates, right, during the whole period, as well as during the exit. So if the next buyer comes in, to make sure that it still makes sense. We always used to increase our exit cap rate, which means we used to account for some weakening of the market. And now we're increasing that exit cap rate even more, just to be conservative. And then the last thing that we do is, we also make sure that we look at this ratio of affordability, if you will. So we look at markets that have a relatively low cost of living, but high income. So we want to make sure that the rent is not going to cost somebody more than, let's say, 30% of their income. And that's one of the reasons why we like Huntsville and some of these other markets, as opposed to other gateway cities like Miami, Phoenix, even Houston. We've actually sold some of our assets in Houston because we like the macroeconomics, or I should say more sort of local macroeconomics in that particular MSA, like Huntsville, better.
Mm-hmm. Awesome. For affordability, I don't know if you've looked at this. So you've got experience with single family as well as multifamily. So one thing that it's been rolling around in my head. So we have low inventory, and that's been driving prices, and there's really no end in sight right now. Like there's really not any single factor that suggests that's going to change. They're just not building enough. However, I've heard this argument that we actually don't have a low inventory problem. We actually have plenty of inventory. It's just investors own a crap ton of it. So to me, it's always been that, I don't know, that black swan event that could maybe sometimes or somewhere down the future. Is there ever a situation or anything, any reason why you would see maybe a surge in inventory because some of these investors, whether they're regional investors like us or more institutional folks, decide to offload at a faster rate than acquisitions?
Yeah, I mean, I don't want to comment too much on single family, but I'll say in the markets that we operate, we're still seeing a huge backlog of construction. For example, a lot of the assets we own are sort of core plus assets where people can afford, these folks are making six figures income, they can afford a house, but there's a 18 to 24 month waiting list in order to get the home built. So for that amount of time, at least, they stay in our apartments. And our most common reason for people not renewing the lease is, after 24 months or so, their house is now ready and they're ready to move. Actually, what we're seeing right now, believe it or not, is that with the interest rates going up, some people are having challenges getting financing for their single family houses. And some of the builders are even cutting back on spec houses, if you will. So I think that's going to impact the demand for apartments even more. So in a tight market like Huntsville, where the occupancy rate is 97, 98% anyway, it's going to make this an even more attractive market from a apartment investment standpoint.
Yeah, and the demographics, it's one of my favorite charts to look at because it shows that, so we got low inventory now, but millennials have been the largest demographic in American history, and they're just now reaching the highest as far as number of millennials, the peak age for buying a home, first-time home buyers. They're just now reaching that. Which just means that it's a lot more folks that are in the pool, yet they're not buying because of affordability or interest rates. But right behind them is Gen Z, with even more people it's an even larger demographic than millennials, the previous record. And the oldest of Gen Z is 21. So they're like barely dipping their toes in the housing pool. That's like a surge of new demand coming to the housing market, which bodes well for long-term projections for landlords, whether you're going to keep or just stay in the market and recycle your equity into new assets. So is there any other factors that you look at to maybe counteract that? So I'll preface here, and I know I'm running against time. Ray Dalio, I don't know if you've read his book, but so he'll look at his argument and see the data, but then he goes and says, why is that wrong? And it doesn't mean that that's wrong, but he wants to figure out and do everything he can to figure out if that's wrong, what would make that wrong? So is there anything that could make, whether it's a low inventory or strong demand, is there anything that you see out there that maybe could or you have to look at to see if you're on point?
Well, I think like Sarah said, right? So one of the things we closely look at, given that we focus on the multifamily space, is new permits, like how many permits have been issued in a market, how many units are coming into market, and what's what they call absorption rate, like what is the capacity of that market to absorb those units. And in the markets that we operate, we specifically look at markets that have either low inventory, and even the projected permits in the next 5 years, 10 years is relatively low. In fact, the number one issue in some of the markets we operate is having enough housing, right? So if you pick the right markets, there's a lot of let's say headwinds that you can face, right? As opposed to a market where you have a lot of units coming on board, which is going to see a huge sort of slump, if you will, or drop in the demand. So I guess it's all about identifying the right markets, buying the property right, and also depends on what's your the whole time frame. Our business plan is to hold the properties between 3 to 5 years. Mm-hmm. We tell our investors, look, it may go, given the market cycle that we're at right now, it might go into 5 to 7 years if we need to hold the property. But as long as it's cash flowing and you're getting a decent return on your investment, from an investor standpoint, that mitigates some of the risk.
Love it. All right. Any final thoughts there before we close out?
No, like your other guests have said, don't listen to everything you hear on the news. Do your own due diligence. Look at other sources out there. Speak to sponsors, and see what they have to say, and then make the ultimate decision.
Love it. Thank you very much, Percy. Look forward to having you on again.